I absolutely agree that value investing has got a solid, say, 40, 50-year track record. The last 10 years have looked a bit more difficult for value investing. What I would say is, the first point I'd make is there are many different styles of value investing. For example, our approach, which is focusing on free cash flow, has actually done very well in the last 10 years. And actually the returns from the free cash flow based approach to value investing has actually accelerated relative to history. Value styles that have done worse than they have historically is ones that just focus on the underlying asset value of the business. We call price to book value approach, or looking at accounting multiples. So for example, price to earnings multiples. Those two approaches have definitely done worse. But I would note that free cash flow has done better. So therefore, if you say, well, value investing hasn't done well, it's actually certain styles that haven't done well rather than free cash flow. The reason we believe the price to earnings ratio hasn't done as well is because earnings are being increasingly manipulated by management. Management are excluding certain one-off costs from their report, from their advertised, we call it advertised earnings, but it's still cash flow they have to pay out. So focusing on the cash flow will hold them to account on all cash flows, not just ones that they choose to include in their normalized earnings. The other thing is we're obviously seeing, everyone I think at their heart wants to believe in value investing. So a lot of funds are trying to replicate value investing simplistically using, say, a quantitative approach or quantitative screens. And we're seeing that they're adopting the accounting multiples, the PE ratio, to do that. So more and more people are adopting the simplistic accounting multiples as a way of identifying value, but accounting is being increasingly manipulated. And this all opens up the door for a free cash flow approach, which is a bit harder to implement, and we believe will continue to do well as a value investing style.